Have you ever noticed how the same story keeps playing out again and again, just with new characters and shinier packaging? Every generation believes they're living through something new, something extraordinary, something different. But what if it's not different at all? What if it's just happening again, and this time almost nobody is paying attention? The truth is, we've been here before. The faces are different, the technology is flashier, and the headlines sound new. But deep down, it's the same cycle, the same excitement, the same fear disguised as confidence, the same greed hiding behind the word innovation. It's the same bubble, inflated by the same belief that this time, the rules have changed. It always starts quietly. A few small wins, a new idea, a story that feels unstoppable. Then suddenly everyone's talking about it. It's on your feed, your favourite podcast, your group chat. You start hearing phrases like revolution, inevitable, the future. People you thought weren't even interested in finance start giving advice. You just don't get it, they say. This is the next big thing. You've heard this before, you just might not realise it yet. So stay until the end to understand what's really happening. Give this video a like and let's start. Right now, people are acting as if the world discovered a secret code for infinite growth. As if we can print, borrow, and spend without consequences. As if stocks can only go up. As if AI will make everyone rich and no one will ever lose money again. But take a step back. Look at what's really happening. Government debt has exploded. Inflation that was supposed to be temporary isn't going anywhere. Interest rates are still high. And yet the stock market is at all-time highs. People are pouring their savings into companies trading at 40, 50, 100 times earnings. Tech giants are being treated like they're immortal. Sound familiar? It should, because it's happened before. Many times. In the late 1920s, it was the same story. People said the economy had entered a new era. Cars, radios, airplanes. Technology was changing everything. The stock market kept climbing and nobody wanted to miss out. Until one day the music stopped. The market crashed nearly 90%. Millions lost everything. And everyone said the same four words. No one saw it coming. Then it happened again in the late 1960s and early 70s. Back then it was the Nifty 50, a group of companies so dominant that investors believed you could buy them and never sell. Coca-Cola, McDonald's, Polaroid. They were considered invincible, but invincible turned out to be a myth. When inflation spiked and the economy stumbled, those same safe stocks lost 70 to 90% of their value. Fast forward to the late 1990s. The internet was the future. Everyone agreed, and they were right, but they were early. Companies with no profits and barely any product were valued in the billions. A small website could go public and instantly make its founders millionaires. People quit their jobs to trade stocks full-time. Every taxi driver had an opinion on the next big tech company. Then the bubble popped and reality returned. The Nasdaq fell 78%. It took 15 years to recover. Then came 2008. The story changed, but the pattern didn't. This time it was housing. Banks promised risk-free returns, packaged debt into complex products, and called them safe. People bought homes they couldn't afford because real estate never goes down. And when it finally did, it crushed the global economy. Millions of people lost their homes, their savings, and their trust in the system. And yet, here we are again. The same story, playing out in a different costume. This time, the main character is technology. Artificial intelligence, machine learning, automation. Words that sound futuristic, unstoppable, too powerful to fail. We're told it's rewriting the rules, that this time the growth is real. But here's the uncomfortable truth. Every bubble in history starts with something real. The technology is powerful. The potential is huge. But what turns opportunity into disaster isn't the technology. It's human nature. Because people don't change. Greed doesn't change. And fear, though it hides behind optimism, doesn't change either. Look at the numbers. Some companies today are valued higher than entire industries used to be. Nvidia alone is worth more than the entire German stock market. Tesla's valuation is greater than the next 10 car companies combined, even though they produce a fraction of the vehicles. And the AI boom? It's real, but it's also being priced as if every chip, every data center, every algorithm will instantly create infinite profit. People forget that behind every story of success, there's another story, one that never gets told until it's too late. In 1999, companies added .com to their name just to boost their stock price. Today, companies add AI to their press releases for the same reason. Investors rush in, assuming anything connected to this new trend will print money. It doesn't matter if the business model makes sense. It doesn't matter if the company even earns a profit. As long as it sounds futuristic, people buy it. But history whispers the same warning every time. When something feels unstoppable, that's when it's most vulnerable. The problem isn't innovation, it's exaggeration. People mistake potential for inevitability. They assume that because something could change the world, it already has. That's when logic disappears and emotions take over. That's what's happening again right now, and nobody talks about it. Because it's uncomfortable. It's easier to believe the story that everything's fine, that the experts have it under control, that the market always goes up eventually. But that's the same illusion that blinds every generation before a crash. Right now, people are back to borrowing heavily to buy stocks, crypto, and real estate. Margin debt, the money investors borrow to amplify their bets, is near record highs. Corporate debt has ballooned. Credit card balances are at all-time highs, and yet people are spending like it's free money. Governments are doing the same. Global debt has surpassed $300 trillion. And while most people shrug it off, history shows what happens when debt piles up too high. Confidence breaks, inflation returns, and suddenly all that paper wealth that looked unstoppable turns to dust. And yet, you don't hear this on the news, you don't see it trending, because nobody likes to talk about cracks when the surface still looks perfect. Just look around. Every market headline feels the same as it did before past crashes. Strong growth, record profits, new highs, soft landing. It's the same language, the same false sense of security, recycled for a new audience that hasn't learned the lesson yet. But the signs are there, quietly flashing red. Inflation is sticky, wages aren't keeping up, debt is everywhere, and the majority of people investing today have never experienced a real crash. They only know a world where dips are temporary, and the Fed will always step in. They don't realise that safety nets have limits. Think about it. The generation that entered the market after 2008 has seen nothing but growth. They've been taught that patience is optional, that risk is a game, and that all you need is time to get rich. But markets don't reward complacency. They punish it. The truth is, what's happening now is eerily similar to every financial mania before it. Only this time it's bigger, faster, and quieter. Because instead of being concentrated in one sector, it's everywhere. Stocks, crypto, housing, AI, debt, even collectibles. It's a bubble made not just of numbers, but of belief. And belief is powerful. It keeps people buying even when logic says stop. It keeps them convinced that prices only reflect progress, not speculation. It keeps them from noticing when optimism turns into denial. Ask yourself, how many times have you heard someone say, "This time it's different"? Those words have cost investors more money than anything else in history. Every generation repeats them right before the fall. Just a little break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below. Back to before. Right now, markets are moving on emotion, not fundamentals. Companies with shrinking profits are worth more than ever. Governments are spending more while earning less. People are celebrating new highs in the stock market, while ignoring the warning signs in the economy. And the strangest part? Most people feel it. Deep down, they know something's off. They see the prices, the headlines, the hype. But they don't say anything, because nobody wants to be the first to admit that the music might stop soon. It's like watching everyone dancing at a party while the floor starts cracking beneath them. You can feel it, but you hope it holds just a little longer. That's where we are now, the silence before the drop. It's happening again, the same pattern of greed, excitement, and denial, the same blind confidence, the same belief that we've outsmarted the system. But markets don't care about confidence, they care about math, and math always wins. There's a quote from Warren Buffett that says, "Only when the tide goes out do you discover who's been swimming naked." Right now the tide is still in. The beaches look perfect. Everyone looks rich. But when that water pulls back, we'll see who was actually prepared and who was just pretending. Because the truth is, every boom hides a collapse inside it. Every miracle story hides a moment of reckoning. Every new era ends up rhyming with the last. The only question is when. History never repeats word for word, but it always rhymes. In 1929, it was stocks. In 1973, inflation. In 2000, technology. In 2008, housing. And in 2025, maybe it's all of them at once. Nobody can time the exact moment the bubble bursts, but the signs are always clear in hindsight. Easy credit, rising debt, overconfidence, and the collective belief that risk no longer exists. That belief is the real danger. Because when enough people share the same illusion, it becomes reality. Until it doesn't. So if you feel that sense of déjà vu, trust it. The patterns are repeating. The language is the same. The emotions are the same. The only thing different is the date on the calendar. Maybe this time the crash won't come from where we expect. Maybe it'll be triggered by something small. A missed earnings report, a failed startup, a sudden shift in interest rates. But whatever it is, when it starts, it'll spread fast. Because that's how bubbles pop. Not slowly, but all at once. And when it happens, everyone will say the same thing again. Nobody saw it coming. But the truth is, we always do. We just choose not to talk about it. Because talking about it means facing it. It means admitting that the party might be over. And nobody wants to be the one who turns off the music. But ignoring it won't stop it. History doesn't need permission to repeat itself. It just does. So maybe the smartest thing to do right now isn't to predict the exact moment it'll all collapse, but to prepare for it. To stay humble when others are arrogant. To keep cash when others are borrowing. To focus on what's real instead of what's trending. Because when the next storm hits, and it will, the ones who survive aren't the loudest or the luckiest. They're the ones who remembered how this story ends. It's happening again. The same cycle, the same mistakes, the same warnings being ignored. And the saddest part, most people won't believe it until it's already too late. So if you're listening to this, don't just watch history repeat. Learn from it. The patterns are there. The signs are clear. You can't stop the tide from going out, but you can choose not to drown when it does. Because while everyone else is chasing the next big thing, trying to get rich fast, and convincing themselves that this time it's different, you'll know the truth. It's not different. It's just happening again. And nobody talks about it. Like nobody is talking about the fact you're not subscribed yet. Smash that subscribe and like button. Let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel, like the one you're watching now, and make money from it, I opened a free Telegram community with the link below. See you there, or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.